Good day, and welcome to the Muthoot Capital Service Limited Q4 FY26 earnings conference call hosted by Elara Securities. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manit Kimawat from Elara Securities. Thank you, and over to you, sir.
Thank you. Good morning, all. On behalf of Elara Securities, we welcome you all to the Q4 FY26 earnings conference call of Muthoot Capital Services Limited. From the management today, we have with us Mr. Matthew Marcos, CEO, and Mr. Ramandeep Gill, CFO. I now hand over the call to management for opening remarks. Thank you, and over to you, sir.
Good morning, everyone. Manish, am I audible?
Yes, sir, you are.
Yeah. Okay. So good morning, everyone, and thank you for joining us today. So on behalf of the management team, I welcome all our investors, analysts, lenders, and stakeholders to the earnings call for Q4 25-26. So if I talk about the year that went by, we had a calibrated growth amidst challenging and an evolving macroeconomic environment. The first of the year, you all know, we saw the stress in MFI spill over to the retail lending piece. In the last quarter, as we all know, we saw global uncertainties arising out of the geopolitical tensions, the war in West Asia, which saw elevated crude oil prices, tightening of liquidity conditions, and continued impact on consumption patterns. And also, it saw a significant rise in OPEX across sectors. But despite all these headwinds, I believe the Indian economy demonstrated resilience, and it was supported by domestic demand, the GST rationalization that government had done, and also the gradual recovery in rural consumption. So all of these were actual tailwinds for the Indian economy. At MCSL, against all this backdrop, we remain focused on strengthening the fundamentals of our business and executing our long-term strategic objectives. During FY 25-26, your company achieved an AUM of 3,500 crores, including the managed book, reflecting steady expansion across core and emerging product segments. We continue to diversify our portfolio with very encouraging traction in commercial vehicles, used car, loyalty loans, and also business from the group companies, while we maintained our strong presence in the two-wheeler financing ecosystem. Our strategic emphasis during the year was not merely on growth, but also building a more sustainable, technology-driven and customer-centric franchise. So at this moment, I would also like to add that, today, based on our technology platforms, we are, benchmark in some of the areas, at least, even compared to large organizations. We made significant progress in our digital transformation initiatives through automated collection, digitization, account aggregator, workflow modernization, and strengthening of governance and compliance framework. More importantly, we've begun laying the foundation for becoming a truly digital and AI-driven organization during the year. We initiated multiple AI-led interventions across the enterprise, including AI-based ticket segregation for compliance and grievance management, speech and voice analytics for customer interaction, smart debt collection initiatives, AI-assisted collection monitoring, enhanced data-driven underwriting, and risk assessment capabilities. Today, 100% of our pre-delinquency calls are done by AI agents. And gradually, I believe by the end of Q1, entire X-bucket calling will be done by AI agents only. There will be no human interaction in these two buckets. Completely, it will be AI-driven. We are also progressively integrating technology and analytics into our audit and compliance tracking, operational workflow, fraud monitoring, and customer servicing functions to improve efficiency and responsiveness. And this is a decision that we are doing across the organization. Because, at MPG Group, we clearly understand that the future of financial services will be shaped by institutions that can combine scale with intelligence, automation, and customer-centric digital capabilities. So our investments, we have made a lot of investments in data lake, business rule engine, workflow automation, and AI-led process enhancement. And these are not isolated projects, but these are actually a part of a larger strategic shift towards building a future-ready organization. While doing all of these, we've remained conscious of the stress emerging in the retail credit environment. Asset quality pressure across the industry, especially in the unsecured and semi-urban borrower segments, has been at elevated levels, and this warranted a more measured and prudent approach. So we have focused on balancing growth with risk discipline, strengthening collection infrastructure, improving digital repayment penetration, and enhancing underwriting quality. Today, we collect more than 80% through digital route, and only less than 20% is through cash collection mode. And as we look ahead, we remain optimistic about the long-term opportunity in India's mobility financing ecosystem, because all the structural drivers are intact, improving affordability with GST rationalization, recovery in rural demand. All of these fundamentals remain very, very strong. Also in the CV space, replacement demand is growing. Growing adoption of digital finance continues to provide a strong foundation for a company like ours, which is truly into the digital space. For the coming year, we have outlined, a focused roadmap. We are targeting close to 3,000 crores of disbursement, and we aim to get deeper penetration into, the markets that we are currently in, and we wish to expand through our digital sourcing channels and continue to improve on our operational efficiency and sustained investments in technology, governance, and AI capabilities. And our long-term aspiration remains clear, which is to build a scalable, diversified institution and fully digital, which will create value for shareholders. So I think with that opening commentary, I would request Ramandeep to take over and take you through the detailed operational and financial performance of the last year and last quarter. Thank you. Raman, over to you.
Thank you, Matthew, sir. Am I audible, sir? Just confirm. Manish,
yes,
if you can confirm? Yeah.
Yes, Raman, you are audible.
Good morning, all. So this time have divided our call into 4 parts now for you all. First, we always spoke about the AUM, then the asset quality of the company, then we'll speak on the GNPA, and then we'll speak on the PAT. Talking about the AUM of the company, including managed book, which I'll just explain right now, we have closed our AUM at 3,441 crores. Managed book, when we say the company has been able to do a DA transaction first time in the last 3 to 4 financial years. So this we have concluded with a pool of approximately 100 crore with the Hinduja in the month of March. On the AUM front, the sole portfolio of MCSL, which was 2,118 crore, now has been closed at 2,758 crores. Whereas the co-lending portfolio, which was 940 crore at the start of the year, we closed at 595 crore. So there is a significant degrowth in the co-lending portfolio, which we have said in each and every earning call. The retail portion of our business, which was around 59% from the MCSL side. If we see in Q4 we were at 89.51% from the MCSL side. So we used to be like 60-40, 60 through co-lending and then 40% through co-lending and 60 through MCSL. That ratio has been significantly changed over the year, and in Q4 we were at 89.51% only through MCSL, and remaining has been contributed by the co-lending front. So when we say on the AUM front of the company, products which have contributed to this 3,500 CR, namely a two-wheeler, wherein we have seen growth. Obviously, the managed book was there, wherein DA we have done. Four-wheeler, when we say used car book, which was initially at 86 crore at the start of this financial year, we closed at 155 crore. And when we talk about CV, which was 61.25 crore at the start of the year, we closed at approximately 240 crore at the end of this year. So which is a significant jump. So this is broadly on the AUM of the company. Now talking about the asset quality of the company, which has contributed towards. So in the last earning call, I remember that the company, when I said the percentage of flow forward towards the AUM. So from the opening standard AUM, when we were at 0.80% was my flow forward forward at the start of the year. Now, when we see Q4, it is only 0.43%. So we might see that GNP of the company, which I have also shared, it is coming at 6.41% and 6.96% with interest accrual. I'll just explain all the entire thing, but first we'll speak on the retail assets of the company. So when we say 0.43% was my flow forward, and we can see that 0.80% has been dropped down to 0.73%, then 0.65%, then 0.55%, and finally we have closed at 0.43%, which is a significant achievement in terms of my NP analysis for the month, for the year. Second thing which has contributed is like my slippages, which was around 18 crore a month, at the start of this financial year. Now that has gone up to that has gone down to 8-9 CR a month, which means we have been able to control the slippages from stage 2 to stage 3 asset by almost 50%, which is again a very significant jump. And when we talk about the asset quality, the contribution that has been made through my retail segment. So retail segment, when we say that, we have also relied on there was a co-lending portfolio, there is an MCSL portfolio. So what we have been able to achieve through MCSL portfolio, the overall yield, which was around 18.5% at the start of the year, blended yield, that has gone up to 21.02% because of the share that has been increased from the MCSL portfolio. With that, my two-wheeler standalone as an incremental business from the two-wheeler, that gave me 22.02% of the yield. My four-wheeler getting 18.45% of the yield, while CV has contributed 7.31% and loyalty loan has contributed 24.92%. So that has allowed the company to increase the yield, and while focusing on the MCSL portfolio as a loan. So this was more or less on the AUM, the asset quality of the company. We'll now speak on the GNPA portion. So we reported 6.96% with the interest accrual and 6.41% with the principal outstanding. On managed book, when we computed GNPA 90 plus, it is 5.58%. The sole reason which has contributed to the increase in the GNPA, while the flow forward has been brought down significantly, as I said, I'm repeating it, it's 0.43%. The sole reason was we have recognized one of our corporate loan, which was up money. So we have recognized at the entire 15.51 CR as an NPA in March. And then, though we know that, and whatever that has to be provided for that NPA, that we have done in March. Now, while saying that, the one more thing, the entire loan, we knew that was in stress since September, October of the financial year, wherein we have been able to take the recoveries out of it. But as far as the DPD timer is concerned, it has to be recognized as an NPA, so we did. Now, we know that provisioning and all we have provided. On the other hand, we are also happy about the fact that we have been able to secure this loan. And then, whatever we have classified as an NPA in this financial year, I hope in the next financial year, in this financial year, we have been able to realize that security and will be able to bring down that NPA portion. This is one. So that corporate loan has significantly contributed towards the NPA. My total NPA as we close this financial year, 194 crore. And then when we added this, then around 15.5 crore, it's a big chunk of that NPA. So this is how the NPA movement for the company. Now, 4 important factors wherein I want to say that first, the company has taken a call on the portfolio which was sourced pre-COVID, and that was lying in the doubtful 2 and doubtful 3 category. So around 12 crore of the portfolio has been taken out from the books, wherein we have taken for the entire portfolio, we have taken the P&L hit as well. How did we classify this portfolio? We have classified this portfolio wherein no recovery has happened for the company on this portfolio since June 2023. Number 1. Number 2, no change in the PCR. It remains at 50% and NNP has to be below 6%. That's the policy of the company, and we are sticking on to it. We have also provided for 43,15,000 fraud loan accounts, which are almost 8 instances that has been reported to us, and for that 100% provision has been provided in the books. For UpMoney, we have already spoken, and then there is another impact of one-time hit that the company has taken apart from the write-off account, apart from the UpMoney, and there was one more hit that the company has taken, which was providing the impact on the new wage code. So based on the financial impact that the company has taken, which I have also explained in the note 5, it was coming as 1.68 CR that has been taken for the valuation of gratuity and the leave encashment. And then I have also explained at the start, we have also done one DA deal, which I have said in the Q3. But because of the fact that my Q1 performance, because of my impairment, was very high, and Q2 it has been brought down. Q3 we have seen some improvement. That is the reason we have been able to we were sure that okay, this portfolio has been classified for DA, and based on our recent efficiency numbers, that has given us enough confidence, to make sure that we can close a DA deal as well. So that DA deal we have taken in the market of 100 crores, and that has been successfully closed. And then these are the kind of things which we wanted to do at the start of this financial year. But we know that how the impairment was impacting and what was the kind of impact. But we have left behind everything till Q3, and Q4 we have been able to do that DA for the first time, and will be able to continue also. At the same time, the AUM has also needs to grow, which we have seen a growth in our MCSL portfolio, as I have already said. Last year, our CEO has said that we will close around 600 crore of business, and then we closed around 562 crore of business, which is a very close number of what we have said. The another income which has significantly increased over Q1 to Q4, and then we are also planning that this income is going to further increase in this financial year, is an insurance income that through corporate agency we have taken a 7.52 CR that has been classified as another income in my P&L. So that also we have taken, and we know that these kind of incomes, wherein since we are a corporate agent, so while doing the cross selling and all, these kind of incomes are going to increase. Second thing, on my ECL versus IRAC, the company is still carrying a 51.57 CR of the excess provision over the IRAC, which you also must have seen in the PPT which I have shared. We said that we have taken a call on the pre-COVID portfolio. We have taken same call on the ARC as well while we did ARC, because at that time the portfolio which has been sold to the ARC was the portfolio wherein we are able to recover something out of the portfolio. So that is the reason. If you see both my ARCs are doing extremely well. The SR at the start of the at the start of the ARC was 103 crores. Now that has been brought down to 26 CCR with the Phoenix ARC. And then similarly another ARC that we did, which was at the start of this financial year, which was around 41 crore. So 23 crore is the closing outstanding from those SRs. The best part about the entire financial year, wherein we have been able to bring down our cost of funds by 60 paisa. The borrowings from the bank till the last financial year, which was only 435 crore a year, that has significantly jumped up and multiplied with 2x. Now it is 865 CR of the total bank sanction we received during the entire financial year. There was no change in the entire shareholding pattern. Promoters still hold 63.33%, and remaining has been contributed by the retail and the corporates. Then taking another update, the total borrowings which the company has done. Every quarter, as I said, in totality, we have been able to bring down the cost by 60 paisa. In the same format, we want to continue in this financial year as well. Only one increase that has happened in the entire cost of fund. That was when we did the co-lending PTC, wherein we know that the partner which we have chosen, obviously it was a smaller partner, so that's the reason. The entire cost has been jumped up, but that has not jumped with that has jumped up with a small percentage only. Other than that, the overall cost of fund has been brought down by 60 paisa. The fixed deposit book, which was at the start of this financial year, which was hovering around 40-45 crore from the years now. Now this year we have closed at 80.83 crores, which is again a significant achievement, and that too at a cost of 8.83%. So this is what we want to continue. And for our structure, liquidity and the ALM which we have filed, we have not seen a cumulative mismatch in any single stage, whereas the LCR of the company was always 100 throughout the financial year. And at March, we closed at 129% as an LCR. For the investment front, the company has invested in SLR, PTC, SLR deposit, collateral deposit we had with the banks from which we took the term loan, and fixed deposit with the banks. We have earned an overall yield of 6.98%. At total, the borrowing cost for the Q4 versus Q3. At Q4, I was at 10.09%, whereas in Q3. Whereas in Q4, we closed our total cost of fund at 9.48%, which is a significant jump. In one quarter itself, the cost of funds have been brought down. So another update, which we have said last quarter, we said that we are in talks with the equity investments. We are in talks with the equity investors. So they wanted us to close our financial year so that they can see the results and all. And we have kept them updated throughout the entire JFM. And we do have a call with them on the Friday itself immediately after the results. So what we will do as the next step is we'll just wait for the term sheets first, and then we'll try to close something out of it specifically with the next 2 to 3 months from now onwards. That's it from my side. Over to you, Maneet. Maneet, you can take it forward.
Now we can continue with the Q&A session.
Sure.
Thank you. We'll now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Vinay Jadwani from an individual investor. Please go ahead.
Yeah. Can you hear me?
Yes, sir.
Yes, Mr. Vinay.
Yeah. I've been an investor in Muthoot Capital for last 8 to 10 years. In earlier times, there was a management with Madhu and Vinod. Then there was management change. And currently, as we know, Ramandeep and Maitri has joined. So we were expecting good times since last 2 to 3 years. And we are still waiting for that to fructify. As you know, debt holders, you issue debt securities and you take in all that kind of debt, they get interest. But we as an equity investor, we are getting nothing for last 8 to 10 years. For the policy, once I was asking that we should be getting dividend. Other finance companies also do profits, and they are also doing finance like Mahindra Mahindra Finance and other companies. They also give dividend to the shareholders. We are not even getting dividends. We are not getting any capital appreciation. In all the last Concalls, we have been told that things will get better. What kind of patience are you expecting from the investor actually? I don't understand. Usually, either you are not gauging the future quite right or what's happening, I'm not able to understand. But what we are getting is that only assurance that now things will improve, It will clarify, that will be very helpful since we are waiting very patiently for last many years. How much patience could you expect from us? That's my question.
Okay, so thanks, Vinay, for the question. First of all, when we took over the company was stagnant on 2,000 crores for 7 consecutive years, right from 2019 till 2023 and 24 when we took over. In the last 2 years, the AUM of the company has grown from 2,000 crores to 3,500 crores. So there's definitely, and this year so within 3 years, it will be more than 100% growth for the AUM. So that is very, very clear that, your patience is paying fruits. That is number one. Number two, on the profitability, our OPEX has gone up because of the fact that we have added many verticals. For 30 years, we were only a two-wheeler loan company. Today, we are a multi-product company, and that is the way I would expect the company to grow. We have now a fully grown CV vertical, a used car vertical, and then we have renewed focus on fixed deposits. So we are a multi-product company today. We are starting online FD sourcing now. So on all the fronts of business, we are growing, but because of the proportionate expense in cost related to adding up new verticals and also the amount of spend we have done on the IT and digital infrastructure, today we are a fully digital organization. So our profits have been slightly subdued to that extent compared to our growth. But you need to appreciate the fact that AUM by this year end would have doubled over the last 3 years. Okay, and that's a significant move in terms of what has happened over the past so many years. Okay, so that is one. On the dividend side, Raman, will you just take that question, please?
Yeah. One thing, sir, I want to add, when we took over this company, the GNP of the company was around 24.5%. Right. So it's not easy, where we need to start the entire process, the entire recoveries, starting from the soft bucket. It used to be outsourced, which has significantly increased my cost of recoveries as a whole. So we need to set up into, that's the sole reason that, the companies enter into ventures like Concall lending, wherein, we can increase our business at the same time, relying on the partners, underwriting skills, and we can see that, okay, different geographies we can enter, but our GNPA should remain at a static level, at least for the incremental portfolio. At the same time, we took call on the GNPAs on the previous portfolio, which I explained as what we have done with the ARCs and how those ARCs portfolio are doing well. I hope that since those ARCs portfolio are doing well now itself after 7 years, and then we have allowed them, to become as a GNPA at the start, which is something, which is not in our control when we have joined. On the dividend front, yes, since you know that the profitability was extremely lower, and I completely agree with you that being an investor for say 7-8 years, I am also an investor in so many companies and all. I completely understand this pain. But the only thing is, whatever was the form of the company, whatever was the thing, we have found out a way now that, okay, even if I just wanted to take it further, even if the business year, even if the business plan that the company has framed for this financial year, it has framed keeping in mind that whatever new product which we have added and whatever was the existing one, which was in the form of two-wheeler, we made sure that company as a whole has defined an ROA first, and then based on that, everything has been decided. Okay, if this is the kind of growth we want to achieve, this should be a number wherein we should contain our impairment, we should contain our GNPA. So this is where, so that we should have something very, very good, in the front of the shareholder. And this is not something I am saying that we have to speak it about after the end of this financial year. Quarter on quarter, we want to show the shareholders that what kind of growth, because we have found some formula. Okay, this is the kind of adjustment which we want to make. And even if you see in Q4, multiple hits we have taken. Otherwise, the profitability for the standalone Q4 would have been extremely good. So we have found a way. Obviously, some calls needs to be taken, which we have taken. That is the reason the profitability for the year as a whole was extremely lower, and Q1 was also a loss. So that was the sole reason dividend was not there. But yes, we will make sure that this kind of situation and all should not occur in future. Now, that is something which I really wanted to say.
What happens, sir, whenever the results come out now? First of all, there's a fear kind of a thing. Is this quarter going to be okay? My first point is that I see the impairment, and again I see, again my impairment increased 20 crore. No,
Vinay, I just wanted to say something here. the impairment which you have seen here now, that is also taking our impact of the write-off account which we have done. Okay, around 7 crores of impact that we have taken in the impairment for this. And all these accounts pertains to pre-COVID era itself. That also I've explained while I was speaking. Okay, overall impairment, then that's the reason I stressed on the fact that flow forward was only 0.43%, and then the overall stage 3 is going down. That is the reason I am explaining this again and again, Vinay sir.
So what kind of profitability for this year we can expect finally, so that so again we can think that now we'll again have I can again wish and expect and wait for one more year. So what kind of profitability we can expect for this year? I'm asking just on profitability because I am an equity holder.
Right.
And I just want to like debt holder look for interest. We look for profitability. Yeah, simple.
So I understand your question. That is the reason if you see at the start of this call, instead of saying that what is the kind of business that we have done, I just took my call into the 4 factors which is very important for equity holder. What is my AUM? Where is my asset quality? Where it is going? What is the GNPA now? And what is the PAT of the company? That is the reason I stressed on that. Now, since I am again saying that there is a formula wherein we have started working. Okay, now I will not say like that by the end of this financial year you will be having this and that. This is something which is again planning something for next 12 months or so. Quarter on quarter we wanted a shareholder to see the results now. Because as a first one thing which has even if you see for the whole financial year, which you have said it that the impairment expense that has gone substantially. For the whole year I have booked 76 crore of impairment expense, right sir? Whereas last financial year it was only 18.5 crore itself. That is where the entire profitability juice has been taken into. This we should appreciate that in Q3 it has gone substantially down, and at Q4 it has gone again substantially down. Now these calls wherein at the end of the year we have to take that one corporate loan account set. Otherwise I have to take all these calls in Q1, Q2, because once we know that this financial year we have been able to manage till Q4 till Q3. So there are few calls we can take in Q4 so that everything should remain in control and we can have a fresh journey with the new portfolio, whatever we have sourced while the new management has taken over. So with that, we should start providing the result from quarter on quarter. So this is something, and then one more thing which I have just said, and I just want to reiterate it. The entire profitability of the company which we have made in this financial year, entire business plan, has just kept in mind, there has to be some good-looking ROA of the company. Pre-tax ROA of the company should be 2.5%. This is what we have taken into our account, and these are the results which we wanted to show from quarter one itself. Okay, the business plan which we have targeted for April, May, June, and the impairment. And now this is getting reviewed every month with each and every income side and each and every expense side. That is there any slippages as of now? When we are saying that it is no, so which means that we are going in something good we're going to do. So this is this is the limited answer from my side, Vinay sir. Just keep at. I'll request one more thing. Please have some faith, wherein we want to develop this.
I'm having faith and having patience. But
Vinay, Matthews here. I invite you to have at any time as per your convenience, have a personal one-on-one discussion with me and Raman, which we will take you through all the changes that we have made in the company, all the initiatives that we have taken, all the AI things we have implemented, all the digital things that we have implemented. We have completely revamped the institution. Okay, you have to see it to believe it. I'm okay. We can meet somewhere where you are stationed in Bombay or somewhere, or we can have a call and I can show you the entire thing. Okay, we are confident about what we are doing. Very, very confident.
Sure. Thank you. Thank you.
Thank you. The next question is from the line of Tejas Kandarwal from Prudent Equities. Please go ahead.
Hi sir. Thank you for the opportunity. As you have said that we have grown our AUM, which I agree. But sir, the growth is meaningless because our profit is not growing at all. And our net NPAs and gross NPAs continue to deteriorate, and our net NPAs are now above 4%. And at the time of such a bad NPAs, our provisioning coverage ratio still remains around 50%. Now, this again raises the concern that profitability is being protected at the cost of balance sheet. And sir, even in the last quarter, provision reversal had materially supported our PAT. And now, sir, we have now seen almost 5 to 6 consecutive quarters of weak performance, and our disbursement has also not grown enough. So, sir, my question is, now even if you have replaced the new head of collection, but sir, after all this, if the present management is unable to deliver a visible turnaround after such an extended period, then would the board consider bringing in the different leadership team with the strong execution track record or something?
No, I think we'll have to get some numbers right. First of all, you admitted there is an AUM growth. Number two, you need to look at the split of the AUM. Okay, when the new management came in, we did not have a sales team to do business. So the immediate step was to stop the AUM from further degrowing. What we did was immediately build a few co-lending partners, and in the first year and almost through the second year, about 60%, 65% of the growth was coming from co-lending. Okay, but by that time we built our own team and we built capability for doing our own business. And with the fact that we saw some stress in co-lending partners with our partners, as Raman has already said that one account has gone NPA, we took a conscious decision to stop the co-lending business as a whole. Okay. And at some stage, our co-lending business was 900 plus crores, which was 1/3 of our business. And that was a zero NPA portfolio because that was the arrangement with the co-lenders where they would give only the best cases to us. So there was a pool which is now degrowing, which did not have an NPA, and our pool is growing, which will have naturally some amount of NPA, and that is why it is apparently showing us a higher NPA, but it is not that our portfolio quality has deteriorated. It is the fact that the denominator, which was zero NPA, is flowing out faster. The 900 crore last year has come down to 500 crore, which will almost be zero by this year end. So whatever we are doing is our own business, and which is our, and we are confident about what we are doing. Two, the board is fully confident about what we are doing. We are appraising them on every initiative that we take. Our AUMs are growing. We are moving the way our strategy objectives, which have been defined by the company, is growing to be on our fully digital organization and AI-driven organization and diversify the portfolio. So all these years, 30 years, we were only a two-wheeler loan company, which is not a very good thing to do because two-wheeler typically happens to be a higher delinquency product. Okay, so we've gone through all the cycles. We've seen that the organization is resilient. We've seen how we can turn around from different situations. And therefore, the board and the promoters are confident about the management and will continue to grow. On terms of our profit being subdued, as I again said, we have made a lot of investment. We have put whole new verticals of CV and CE, and there is a India team now. Those two businesses are only being supported by the two-wheeler business. They are not breaking even now. So that the entire cost of two verticals is being borne by one vertical, which is the two-wheeler loan business, which also went through its own challenges because of not just our own issues, but macroeconomic conditions. Like we are a very closely, related business to the MFI segment. MFI saw huge stress. You saw the MFI stress spill over to unsecured lending and secured lending. But despite all of that, we've been able to, while make small, though it is smaller, but we've been able to make profits across the quarters. Now, two things you have to keep in mind. One, the two-wheeler business is supporting that stress. Two-wheeler business is supporting outflow of a non-NPA pool of co-lending. The two-wheeler business is supporting two whole new verticals which have come up. The two-wheeler business is supporting a whole new initiative of digitization, AI. All of this involves a lot of cost. Okay. After having done all of that, we've been able to come quarter on quarter and show you some results. Of course, I know this is not to the satisfaction of the investors. It's not to the entire satisfaction of us also in terms of the results. But we are fully convinced about our actions and what we are doing, and we'll continue to do what is right for the company. That's my assurance.
So,
Raman, you want to add anything, please?
Sir, one thing I want to add. A few numbers, sir. I think because sir has said that, in Q3 we have done some PCR change and all. I'll tell you, sir, my NPA is, since you must be having this PPT, you can also do the same number with me. We have reported an NPA of 209 CR. Okay. While in Q3 we have reported 211 crores. You can just see PPT is with you. Okay, 211 crore we have reported. Now that 211 CR was the entire retail NPA. Out of 209, just subtract 15 crore from the up money, which was the corporate loan. It would be 194 crore. 194 crore on a book of 3,441 crore. It comes at a GNP as a percentage of 5.64% as compared to 6.45% in Q3. So you tell me, sir, why that? You tell me, sir, that whether the NPA has gone down or increased. If you compare apple to apple, you compare our PCR, and then you say, because the statement which you have made, the NNPA has increased. NNPA in my Q3 with the PCR of 50%, that was a conscious call we have taken because we know that our retail portfolio is performing extremely well, was 3.64% without, and just comparing apple to apple with retail portfolio, my NNPA would have been 2.82%. So this is the kind of change which the company has made. Yes, Mr. Tejas, over to you. You can ask now.
So as far as I can see, sir, our NPAs have bottomed around Q2, Q3 FY25. After that, they are raising, and NPAs will cross now 7%. So, which is, I think, concerning. And the second thing is, you have talked about the growth in AUM, but sir, our disbursement has not shown any growth, both quarter on quarter and both year on year. So I don't know when, at the time when the entire auto sector is booming in India, I think you are missing the golden cycle.
Yeah, sorry to interrupt. First, I want to take this question on the NPA first. You said around 7% and all. I want to know this calculation, how you are doing it. Apple to apple, you do that. Retail to retail. Corporate loan, up money was an excluding factor, which we already told on that we already have a security with. Just exclude corporate loan, then you inform us that where we are on our NPA. Because at the start of the call, I myself has said that we were at 0.85% as a flow forward towards the standard AUM. That has gone down up to by Q4 as 0.43%. That I have accepted that at the start of the year it was like this. But now it has been, it has been halved. It's only 0.43%. So I wanted to know what make you say that it was 7% and all. I just want to know the statement, sir.
I mean, in presentation you have given the 6.96% of GNPA.
Sir? Yes, sir.
Yeah, so it's around 7%, right?
Yes, very correct, very correct. So 6.9, that is the reason I am explaining now. While answering your question, I said 6.96%.
That's what I said, that gross NPA is running towards 7%.
Yes.
That was my, that was what I said. And then second was on the growth, which you have said that you're growing, but your disbursements are not growing. And the entire auto sector is booming. So I think you're missing the golden cycle. So that was what I said. I don't know what you're talking about.
Okay. So, sir, this is what it is. So, when I'll repeat that, or this 6.45%, 6.89%, whatever it is, or the NPA. When at the start of your question, the question was that we have changed the PCR, this, that, and I wanted you to have a comparison on the retail to retail. That is the reason when I was explaining my call, I said that the company has taken up money as a corporate loan as a hit of 15 crore as a one-time hit. That has led to an increase. If you reduce that component, you compared apple to apple, your NPA would be 6.45% in Q3. Now it is 5.64%. So it is below 6. That is how my retail portfolio is getting executed now, sir. Over to you, Matthew, for the AUM front.
On the question of the growth, again, I clarified in my response. Earlier, we were growing MCSL plus co-lending. Today, we are growing only MCSL, and we are at the same level. Okay. So if I add co-lending, I can grow another by 50%, which we don't want to do. That's why we are not doing. It's a conscious call. We are very clear of what we are doing.
Okay, sir. What growth should we look at in FY27 on the AUM side and on the profitability side also?
Tejas sir, one more thing. Sir, I want to take this question. Okay, sir. Tejas sir, on the slide 7, which we have shared, if you can open, if you have that in front of you, the growth which I wanted to say that NCSL portfolio was 2,118 crore. That has gone up to 2,758 crore. 29% of the growth which we have recorded. Sir, I believe that is in line with the industry. The only answer to say that there was some degrowth which was around co-lending growth, which has been degrown by 40%. 940 crore has become 595 crore. Okay, sir. So we wanted to grow the NCSL portfolio in the same lines in this financial year as well, sir.
Okay. And on the profitability front?
So, sir, as I
what
said,
kind of ROA have you decided internally?
So,
anything
sir, yes.
That?
So, while doing the business plan for the company, the cumulative ROA which we have taken, because we know that two-wheeler is an existing one, while four-wheeler and CV are the new ones, wherein they need to perform extremely well, and which they are doing it as well. So we are expecting that either of two will get a break even in this financial year. Okay, but we have not taken while computing the overall ROA. Pre-tax ROA we have computed as a whole for MCSL would be around 2.5 to 2%. This is what we wanted to say.
Okay. Thank you so much.
Thank you, Tejas sir.
Thank you. The next question is from the line of Vinod Krishna from Avendus Wealth. Please go ahead.
Sir, am I audible?
Yes, Mr. Vinod. Yeah.
So how far is our 10,000 crore AUM and 3% ROE or 4% ROE target? And are you now confident about the business model that you have said, because you have invested in digital AI and collections and in sourcing from only our portfolio. So and also North, because we have done for us North is new. So how confident are you that your business model is set in North and about the growth, and what do you say? How far is that 10,000 crore? So if I can, how confident are you from the way you are set up the new once the new team has come?
So we are very confident about that 10,000 crores. That's why we put up that number on board. And we also this year before budgeting, we again went through all our strategic objectives. We've retained all of them. We are looking at 10,000 crore by 28-29, somewhere thereabout. And the path this year is we definitely cross 4,000 crore AUM. Somewhere close to 4,500 crore is what we are looking at. But we will look at the evolving situation because of the ongoing crisis and all that. We don't know how it's going to impact India. You already heard PM say a few things yesterday as advisory. So we will look at the evolving situation. We want to go quarter on quarter, but we are very, very confident about our business model. We are confident about our team. We are confident about the locations that we have opened up in the North. All the locations are doing well, and we will continue to scale there. We will go in a calibrated manner in North. We will not expand to all the markets. The markets where we are present currently, we are comfortable. We will continue to grow. Other than that, we are expanding in newer markets where we did not have much deeper presence, like Maharashtra and Tamil Nadu. Both of these are very, very good markets, but our presence was less, where we are going deeper into that. And we are very confident about our business model and the team and the initiatives that we are taking.
Thank you, sir.
Thank you.
Thank you. The next question is from the line of Ankur from Gen Capital. Please go ahead.
Yeah, thanks. Matthews, Hemant, congrats. I think you guys have been navigating a very, very tough environment. Matthews, I think you complete 3 rounds also, so congrats on that. First question, if you can give us more color on the team build out that you referred to. How is the collection and BD team shaping up?
So, collection and the second, what was the team you said?
Business development team.
Business, okay.
Oh,
so today,
Yeah. So today we have, completely divided the company into various, SBUs, okay, strategic business units. So we have a business head for two-wheeler business. We have a business head for car, UCL. We have a business head for commercial vehicles, and we have a business head for the group relationship business. So which is all the group companies. So we have been only getting business from Muthoot FinCorp for a long time, and that used to contribute almost 85-90% of the group relationship business. This year onwards, we are going with Muthoot Microfin, and Muthoot Microfin has already signed up with us, and also Chits and Muthoot Housing Finance in a small manner. While the volume will not be large, but the objective at a group level is that when we do scrub on individual company base, we see that a lot of customers go outside of Muthoot's ecosystem to take loans, which is already available in the Muthoot ecosystem. So that is something at a group level we are trying to keep in-house. So all group companies carry 1:4 target, which is one customer should have 4 products within the group and all that. So those kind of initiatives are happening. FinCorp will continue to be the larger chunk. So those are the 4 business verticals. We have a head of collection who takes care of all the 4 business collections. But he is supported by zonal heads in the north, east, and south. West, our portfolio is not that big, so as of now, we don't have a zonal head there. But as and when the portfolio grows, we'll have people there also. Other than that, we have today a full-blown, audit function, compliance function, risk function, credit head and credit team. Most of our two-wheeler credit has been automated through scorecards. So largely the team is for car and CV, which still is manual in terms of, while the flow is digital, but the underwriting happens with a manual intervention. We have a full-blown now legal team. So all verticals. So some 17 HODs report into the CEO. All of them are full-fledged departments. So all of these are investments, and we've invested a lot in compliance and governance, which is reflected in our upgrade in our recently conducted RBI audit and all that. So all of these are resulting in very good softer aspects of the business. And of course, we know that the investment on the business side is going into developing all of these. So we are building our organization from the very foundation. Okay. And the results are there to be seen. The promoters are happy, the board is happy, and we will build it. We are confident about it.
So, given the current cost base, what kind of cost to income ratios we should look at, let's say, F27 and F28? Is the cost most of the cost loaded, or is there more cost coming in?
Sir, as I said earlier, we do have 2 new products in line, which is used car and CVs, right? So therein also the business is increasing extremely well, and either of 2 will get a break even in this financial year itself. So therefore, when we talk about MCSL as a whole cost to income, yes, it is very high as of now. We target slowly to bring it down, and obviously the good target is to remain at around 60-40. Right, which is not now as of now, but yes, for this financial year, we want it. Right now, it is 85%, wherein we are standing as of now. But when we know that the overall cost, when we say that for two things which is really helping us out now. One cost which has helped us out throughout the entire financial year was the cost of funds. That has gone down by 60 paisa, and then on the new incremental cost of borrowing, new incremental funds which we are going to raise, which would be around 3,000 crore. On that 60 paisa would be having a huge impact. Number 1. Number 2, which I will say that the cost of impairment, wherein we are seeing some good results starting Q3 itself, and Q3 and Q4 we are hoping that if trend gets continue in Q1 and Q2 itself, we will be having a good margin for our cost to income as well. So I hope that Q1 would be good, and based on that, for the entire financial year, we can still project that, okay, we will not achieve as per what we wanted as a 60%, 60 to 40, but yes, we'll be somewhere around 70-75% as a whole.
Yeah, Raman, two follow-ups. One, how much equity are you planning to raise, and will this come from promoters? Second, you mentioned 3,000 crore. Is that the debt that you will take over, what, 1, 2, 3 years?
So Yeah, understood, sir. So answering both, sir. Number one, as I said at the start of the call as well, we got 2 investors during the last year itself, but Q1 was not that good, and Q2 we improved, then Q3 and Q4 we have been able to show some good. That is the reason I'm focusing on my portfolio as a whole. One surprise in the corporate loan has come. Other than that, the results as per me as a CFO was extremely good, and the performance in terms of the asset quality has been significantly improved. Okay, so these results have been, so we have shared this with our new investors as well. Not confirmed though, but yes, they want to do some due diligence on the final results and all, which they will start now, and immediately after the AGM, they will take the entire balance sheet to review and to reflect. So we are targeting around 400 crore, wherein the promoter also wanted to contribute. This round would be more in the form of CCPS. Why? Because this would be more of a milestone based. The valuation of the company is not that great, which you already know in the market. So that is the reason milestone will play a very significant role here again. So we wanted to target a 400 CR itself, wherein 200 would be upfront and 200 based on some milestone which we want to do. And then yes, promoter wanted to, they always wanted to take a substantial share. Right now they are at 63.63%. Obviously they want to maintain somewhere around more than 51% throughout. So this is one. Second thing, on the 3,000 crore, I said this would be my total borrowing which I am planning. On that, the cost of funds, as I said, because when we talk about the ROA as a whole, it doesn't come only from the impairment and from all. While saving the small cost, and now it has become so big that 3,000 crore, a percentage of 60 paisa, that will contribute a lot in this financial year on the overall ROA of the company, sir.
Okay.
I want to add something where Raman has left. So earlier I had mentioned in reply to Vinay saying that I invite all of you for a more detailed, demo where we can take you through individually or collectively through the processes that we have put in, all the improvements that we have made, which will actually give you more confidence in what we are doing. So that offer remains, and I'm happy to invite as many of you are joining this thing. But in the current moment, I want to add few initiatives that on the cost saving. So our entire two-wheeler today underwriting, and we have also got AUA, KUA license from UDAI. So our KYC is going fully digital from this month onwards. Till now we were looking at various options. Some was manual OCR and all that. Now we are enabled on face authentication and biometric authentication. So our entire KYC is automated. Our risk underwriting is automated through scorecards. So the last leg was so when the risk credit underwriting becomes automated, we had about 30 odd people doing two-wheeler credit. Okay, that team will now get reduced to 3 or 4 because they just need to monitor the BREs. So that entire cost we move to the car and CV, where we need people to do the underwriting even now. So while we are building these two businesses, we will not be adding that much incremental cost because of the saving that we are doing here. On the second leg, the last leg of the disbursement process of two-wheeler, which was operations, used to be manual, where after the KYC is done, then the underwriting is done. Few people, again, some 40-45 people were sitting and looking at files, looking at the invoices, insurance, margin money, etc., and disbursing the files. That leg, we have developed an AI tool and made that automated. Today, we are getting about 65% application level STP on that. So that over a period of time, the next 2-3 months, because it's a machine learning model which learns and improves, we expect to take it to 90%. In which case, instead of this 45 people, I'll need only 5 people to do that entire leg. As of now, all these costs remain with me. The credit costs, the operations costs remain with me because I can't send everybody home. But these are rationalizations that we are making, which will, in the time to come, improve, because even with increased volume, I will not be adding more people, because all of these are automation that we are doing. It will not reflect in any balance sheet, any P&L account. These are all things which I can show you if you have a chance to speak to you individually and demo. There was a huge amount of cost that I was incurring in terms of name match, face match, address match, geo distance monitoring in each application. So there were geo distance restrictions. If a customer says beyond 40-50 kilometers, we will not do that loan, etc., etc. So all of these used to be API calls to external vendors, which we have built in-house, and from the month of May it is in-house. So that used to be a 3-4 crore build for me in a year, which will not be there from this month. So these are all, none of these come in any of the published figures. These are all initiatives that will gradually improve efficiency as well as reduce cost for the organization. And these are the things that we are implementing with full support from the board and promoters and everyone. So we are very confident that we are in the right track.
Yeah, Matthews, we had the chance to meet microphone management in Bombay last week. So a lot of initiatives which you are talking about there, I think they've already done. So you have a good learning ground there. Just one question: if you guys can hold one investor day either in Kochi or Bombay, and
we can. That's a good suggestion. We will do that.
Is it fine if we drop a mail to Deepa to coordinate that?
Yeah, please do that. Please do that.
Yeah.
Please do that. We will be more than happy to come and present all our initiatives.
Yeah, so fine enough. I'll pick it up with Deepa and congrats and all the best, guys.
Thank you.
Thank you.